I'm delighted to be talking to Josh Comrie. How are you, Josh?
I'm amazing, Darcy. Thank you so much for asking and for inviting me onto the podcast today.
Thank you so much for saying yes. So, just for a little bit of background, so people can understand who you are a little bit. What I understand of you, you're an advisor, you're founder, speaker, investor. You help founders and owners scale, solve, and exit to freedom. I think we'd all like to exit to freedom, to be honest. But
Amen.
give us a little bit of a lowdown. Like, what do you do? What is a day in the life of Josh Comrie look like these days?
So I've been through the entrepreneurial founder journey repetitively over the last 25 years myself. And so I got to a certain point and I said to my wife, perhaps I might be done with startups because they are very involved and very all consuming, very rewarding along the way. But once I exited my last business operationally, which was Ambit, I began to receive and field phone calls from people that wanted some help around building a better business, understanding what the exit value of that business might look like when they get to that stage, and helping them solve problems that are inevitable along the way when you're scaling for growth. And so I now interact with founders on kind of three different ways. I do the speaking thing, so that's either at company symposiums or at industry conferences. The second is that I work with cohorts of people, so CEOs and owners of companies that don't have executive teams in place. So typically they'll probably be less than about $2 or $3 million in revenue, and they'll be the hub in the center of the wagon wheel. So they're very much kind of living that owner-operator kind of world. And so I bring groups of those people together and work with them over a course of a year to enable them to build better value inside their business asset. That's the second method of engagement. And the third is that I work with executive teams in medium to large businesses. So businesses that will be kind of $5 to $25 million in revenue that really want to have a better handle on how they go about the business of planning around the pillars that I operate, which is strategy and vision, people, so the people inside the business, which is visibility and succession, then customer, so sales and marketing at its core, but a much smarter way of doing it. And then the last is IP creation. And so I operate based upon those modules and apply them across the context that I've mentioned earlier, speaking, cohort, and then advisory work for executive teams. I've been involved in the startup investment space for a very long time, 25 years now. One of the founders of Flying Kiwi Angels, and so still actively have a hand in kind of contributing to the growth and success of that organisation. Served on the board for a number of years. I do some board service elsewhere as well. And then I've had a range of commercial industrial property that needs from time to time some attention and focus.
Yeah. There's some people that come across really confident, ambitious, and they've read all the books and they've got all the lines to say. But then there's people who've actually done battle in the trenches, and that would be you. Correct me if I'm wrong, right?
Oh, many battles, many battle scars.
Yeah, that's good. And sometimes those scars in the healing process can actually help others to learn so that they don't have to go through that pain. So I'm keen to just really unpack that. But to get started, what is wealth? What's your definition of wealth?
Mm. I wrote about this on a couple of different occasions. And so I separate wealth from being rich. And my position is that I used to think that I was pursuing wealth in my life, but in reality, I was actually pursuing the idea of being rich. And I differentiate between those two. And I think this is quite helpful as a context. Rich is having the trappings of money. So material possessions, watches, cars, big houses, fancy holidays, that sort of thing. And don't get me wrong, those things aren't wrong, but if that's the only reason that you're pursuing it, then I think you've missed an opportunity. Rich is being the person who is solely focused on the number as opposed to the impact they could achieve through accumulation of money. Wealth is sharing, rich is retaining for oneself. Analogy that I use in the world, wealth is Warren Buffett, rich is Andrew Tate. That's a good delineation for people.
Yeah.
So to me, wealth is having freedom, having the choice to be able to both live a life and a lifestyle which is congruent with your values, but also being able to share that with others. And it may be at its simplest, sharing ideas and sharing experience in the hope that others achieve some growth and some insight and avoid the inevitable mistakes that happen along the way. And it could be through sharing it physically as well. So, giving away to charities, or in my case, I've both given away to charities extensively over the years, but also started a charity myself as well. So all of those things to me kind of constitute wealth. I can talk about the backstory of wealth as well, if
Yes,
that's
please.
of any interest. Yeah,
Yeah.
I think it's quite interesting, especially over the last kind of 20 years or so, that there's been an unprecedented level of wealth creation globally, and it's quite wild just how much there's been an elevation of certain parts of society. And I say certain parts because there's a lot of folk that really have not had a market change to their situation. You know, the number that the top 50 individuals in the world have as much as the bottom 50%, and the top eight most wealthy individuals, men in the world, their wealth has doubled over the last 2 years. And so it's become quite concentrated. But if we go all the way back, wealth was really the basis of the way that you could get it for the longest time in humanity was through inheritance. So it was really family wealth, and it was often a bit of a closed party to those that didn't have that backstory. And so, the beginning of humanity, 150 odd thousand years ago, we grew and accumulated. We had the city state to start with. Then we went to the nation state. I think we are now moving to the corporate state in terms of the control and influence that corporates have over the world, which is a little bit scary. And because their morals, their values are not always aligned with the needs of the many. They're aligned with the needs of the few, the stakeholders they serve, which is their shareholders and their directors and customers, hopefully. But the wealth creation thing was really spurred along by the second real kind of revolution that happened for humanity. It was the first industrial revolution, which was powered by steam, the late 1700s. And it really offered an opportunity for a new generation of folk that had some initiative, they had some ideas, they had a lot of drive and ambition to go about and harness this technology, which in those days was steam, and then go about creating machines and then building industrialization, which led to the subsequent kind of three industrial revolutions that we've had since then. But that was the opportunity for the new wealth to come along. The new rich was kind of spurred off the back end of that, late 1700s, early 1800s. And then, of course, there was the birth of the New Worlds, which was the Americas, particularly North America. So before that, it was really the domain of the royalty or those associated with royalty. And then there was people that inherited it over time or maybe served that royalty or that monarchy. But over the last kind of couple of hundred years, it's become something which is available to more and more people, but it's become so pronounced. Just like everything in the world, the rate and the pace of change is increasing quite markedly. And so where we're living right now, the last 20 years has just been an absolute explosion of wealth. We can drop crypto right in the middle of that, just for an example. There's been an immense amount of wealth creation through crypto and associated assets such as NFTs. By the way, I delineate those as well. It's another comparison that I make. Rich is NFTs, wealth is fine art. And then I go,
Nice.
Bored Apes, I'm sad. Oh man, so the NFTs are just the OG NFTs are just disgusting, in my opinion.
Okay, I'm not going to offend anybody today, so I'll just stay quiet on that topic.
I,
Um,
I believe in the class,
yeah,
but what's been produced, the AI producing the Bored Apes, nobody can say that that's fine art. Nobody can. There's just no argument for that being an incredible piece of something you'd want to hang on your wall. I understand the
yeah,
asset class. I don't
yeah,
get what hype has gone around them because it's not really meeting the original objective of why the people back those things. But yeah, anyway.
yeah. Let's go back a little bit around, like you're mentioning these different ages, right? So we have the first industrial age, and it was when we harnessed the power of steam, right? So there was like this technology existed, it already existed, or I guess the wealth potential already existed, and it just took time, I guess, for people to discover what was already there. And one of the questions that I kind of play around with in my head is just this idea of, can wealth actually be created, or is wealth actually just waiting to be mined? Do you have
Mhm.
any kind of perspective on that?
Yeah, that's a great question. So I think historically for people, they would fall into the category of going, wealth is created. And so I think that I can sit in both camps. I'll use the word ambivalent here, Darcy.
Hmm.
Ambivalent in its classical sense means that you can hold two opposing ideas in mind equally at the same time. Modern English has converted ambivalent to being I don't care. I'm indifferent to it.
That's
But
right.
I'm a little
Yeah,
bit ambivalent to it actually.
yeah,
So I think that I know that any form of disruption, steam was a form of disruption, electricity was the next revolution, then we had the computing revolution of the 1960s, 1970s. Any form of disruption creates an opportunity for people to harness that disruption and then build on top of it. And it is typically the people that build on top of whatever that original disruption was that do exceptionally well. Edison is a wonderful example. Alexander Graham Bell, around about the same era, albeit that Alexander Graham Bell didn't invent the telephone, theoretically. Marconi at the same time, interestingly, in the United Kingdom, I think he was. And so then Edison was the person that invented all of these things that ran on electricity. He was responsible for DC, not AC, which came from Nikola Tesla,
Tesla,
of
that's right.
course.
Yeah.
And so then we moved to the 1960s, 1970s, and then of course people like Bill Gates and Steve Jobs came along, and they really built on top of this thing that was this computing infrastructure, this revolution that was around, and they built the software and these applications and these tools that enabled us to kind of dig into them. So I think that you could say that it's either, really. I mean, the journey of creation has a genesis in an idea,
Mm.
and so the idea is the disruption. And then those people that then realize that that is an opportunity have an idea around a thing that they can build on top of that. And so
Mm.
that means creation to me. Where
Mm.
do ideas come from? I've become of the school of thought that great ideas don't come from me, they come through me. And the
Mm.
reason that I think that is because it offers me objectivity to ideas as opposed to possession of those ideas. And as soon as I'm in an environment where I feel possessive of my idea, I'm unable to take on others' perspectives on that idea and realize that it's actually a dumb idea. So the whole argue like you're right, listen like you're wrong kind of
Yeah.
notion. I think that ideas very much come through me, and then objectivity, build on those things. To wrap back around to your question, Darcy, at the outset, you said, is it mined or is it created? So I've talked about the created thing. I think the mining is perhaps a simpler version, and it's maybe building more on what others have done before you. And so
Mm.
you're not necessarily the person that may be the innovator, but you might be taking advantage, not in a bad way, but taking advantage or capitalizing on that opportunity to kind of delve further into that space. I think ultimately, if there's value creation, if you're building something of value, not just to yourself, but to humanity or groups of people or communities, then that's a wonderful thing.
Mm. So just going back to what you said around good ideas come through you, not necessarily good ideas come from you, but good ideas come through you. The obvious question probably to explore there would be, well, where were they before they came through you?
Yeah, now we delve into some kind of spirituality realms. I think that they just exist in the ether, kind of thing. I'm not someone who believes in religious dogma, but I do have a sense that there is a greater force somewhere. I have no kind of concrete evidence to support that, other than experience around things like cogitating on a problem, and
Mm.
then randomly I get offered some incredible insight. And historically, if I go back 10 years and before, I would have very firmly said that this is my insight. I generated and created this insight, and look how smart I am. A bit of age has offered me a bit of perspective and also allowed me a little bit of humility, I hope. And I now kind of realize that where does a thought come from? Where is the origins of an idea? Is it truly mine, or has it just been kind of given to me? If it's been given to me, I don't necessarily need to know where that's come from. And I've probably spent some time reflecting, discussing, sleeping on whatever it might be, that problem that I'm endeavouring to work through. But I'll
Mm.
then just be offered some form of solution. I use that language. I get offered a solution or a thought to something, and then it does ground me in that objectivity of that idea, because I think that we can all fall victim to believing that something that comes through or from us is precious and is wonderful, and then potentially pursue that to the detriment of time, money, whatever might be most important to you.
Yeah.
And believe me, I've had some not great ideas historically, and
Yeah.
they've cost me a lot of money and taken some time. And if I had been of the view that I am today, which is let's be very objective and maintain some distance from that thing and discuss it in a way that it's not mine, I'm not precious, I'm not attached to this thing, then I
Mm.
think it's a much more powerful way to approach creativity and problem solving.
Yeah, I like a lot of what you're saying in there. So you've been offered a solution, but you found probably that when you cling to that thing, you lose it, but when you let go of it, you find it, right? And so you really are a conduit. You're not necessarily concerned about where that comes from, but you do know that it's kind of been offered to you. And when I look back in history, all the probably the great inventions, I think there's a high correlation between just how, um, I guess today we probably look at them through the lens of history as mildly eccentric individuals are often the ones that create the most amazing things. Like you appreciate fine art. You know, where does that stuff come from, right? Like when it's truly, truly creative, it's like a picture almost of somebody who finds a river, then eventually they go to the source, they find a spring. Um, but really it's the one who kind of is willing to dig in a new area on the belief that there might be a spring there that probably gets closest to the true form of wealth, and everybody else just kind of feeds off of it. But it gets harder and harder because it probably requires a certain degree of self-confidence, self-awareness to kind of go there. What do you do to go there in terms of digging deep when you're in this creative mode and you're trying to, ex nihilo, create something out of nothing?
Yeah. So my belief around thinking is that when you apply your cognition, your ability to process things, and some models, either mental models or actual physical models, such as canvases, the business model canvas is a relatively well-known one. If you apply your thinking to something, then you're going through a very active and proactive journey to try and identify a solution.
Mm,
Back to the notion of a thought, which is just one of those things that pops into your head, into anyone's head, which is one of the beautiful things about the gift of consciousness that we have as a species. And it's also one of the torturous things about the gift of consciousness, because it means that, if you're anything like me, then there's kind of thoughts that are almost constantly running through my head. Some of them are amazing and wonderful, and some of them are, get the hell out of there, kind of thing. And so,
yeah.
for me, I kind of adopt kind of both of those things depending on what the circumstance calls for. So the conscious approach, the methodical approach around mental models, around physical models, around dialogue with other people, all of those things really help me go through that creation process. And then there's the more spiritual practices. So I'm an active meditator, have been for about 15 years.
Mm,
I journal daily, and I go on meditation retreats once a year for a number of days, go and live with a monk for a number of days.
mm,
And so all of those things allow me the ability to, kind of get out of my head as much as I possibly can, clear the space. And then it's a wonderful, beautiful thing that tends to happen in those environments. I've
mm,
historically tried to force thinking in those environments, but it's quite contrary to what the practice is. To then sit down and kind of try and reason your way through a problem, as opposed
mm,
to sitting in the quiet, beautiful space that an effective meditation is, and just allowing something to pop up for you. And that to me
mm,
is the whole, the beautiful. Where does that come from? And I really don't know, but I
mm.
love it as a part of the experience of being a human being.
Like you do you kind of come out of that state of meditation journal at the same time, or is that kind of just like no expectations whatsoever?
Oh, yeah. So more often than not, the routine looks like meditate, breath work, and then journal. The
Okay.
breath work is quite active, the meditation directly after sleep. And so going into meditation with that state is really powerful. And also my brain hasn't really switched on at that stage. Breath work in the morning for me is a very active practice, so a stimulating practice. There's a range of different techniques that you can apply. Wim Hof breathing technique has become pretty popular, and for those unfamiliar, just YouTube Wim Hof breathing, and you'll see some videos. I use an application on an app on my phone called Othership, and there's about 300 breathwork sessions on there. Some nighttime, some morning, first thing, and they stimulate the system. Sometimes a endogenous DMT release. DMT is a chemical substance which both sits in the body but also in psychedelic substances,
Mm,
such as it's not psilocybin, that's the magic mushrooms, and ayahuasca, which is the
mm,
South American plant medicine. So DMT comes from the body as well, so you can stimulate that release. It's a very mild one, but it is also a very, very pleasant, enjoyable sensation, but also one that can be quite creative. And then the
mm,
journaling is either if I've had some things that have come up for me, or if I've been unable to move on from a thought, then I write that out. and really reflect deeply on that thing and endeavour to dig to the bottom of it. I call
Mm.
journaling conversation with the higher self. So I don't mind sharing that I grew up in Papakura in the 1970s in a solo parent household. And so in those days, and then leading into high school, the notion of having money, and remembering back in the 80s and the 90s in New Zealand, there really wasn't that much wealth at all. It was a pretty flat kind of society with a few folk that had done exceptionally well, but it was that huge bull run of the stock market in the 1980s that led towards a lot of wealth being created and then destroyed. To have money in Papakura in those days meant that you had kind of $5 that you could scrounge together to put some money in a gas tank of someone's brother's car that you borrowed to go to the beach or to go to town or whatever it might be. So I had no real exposure to it. When I was 20, I had a girlfriend whose family was very wealthy, and houses around the country, boat, helicopter, kind of level of wealth. And my question after a period of time to them was, where did you get your money? And they said, well, we inherited it. Of which I said, well, bugger, that's not going to happen for me. So of course the next question was, from whom, and what did they do? Granddad was where it came from, and he had founded a packaging company in the 1960s or early 70s, which the sons, the father of my girlfriend at the time, had inherited, and they'd sold directly before the stock market crash. So they'd capitalised exceptionally well on this asset, and then deployed it in a range of different things. So that was my first exposure to true wealth, and then I became very curious about the journey that those people and others had been on, and became a avid student of wealth creation, globally, locally. There wasn't so much in those days, but I started my passion for growth development books. At the time that I was at university, that was when I was dating this young lady, and
Yeah.
so started to pick up and consume all of the text and the books that I could around individuals that had succeeded, and also kind of any growth and insight books across a huge range of different types of subjects. But the first one that I actually read was on Sam Walton. It was led to me by a then mentor, and it was the story of how he started with the dime stores, and then kind of built these things up over time. And of course,
Mm.
the rest is history. But his three kids, as recently as about 10 years ago, three of his offspring were in the top 10 most wealthy people in the world. Level. So, unprecedented level since the robber barons of the late 1800s, the robber barons, the Rockefellers and the Carnegies and etc. of the world in the United States that had some pretty anti-competitive monopolistic behaviour that allowed them to dominate industries and then get unfeasibly wealthy. That kind of stopped a little bit over the early 1900s, but then kind of cropped back up again with people like Sam Walton a little bit later on.
Obviously, fast tracking it a little bit. I think when you came on the radar, and me 5 years ago, was when I had caught up with Tim Warren having a chat around AI back probably
Right.
like, yeah, 5 years ago, Ambit.
Yeah.
So, can you tell me a little bit about the Ambit story and kind of where that's at now? Because I haven't had an update around that for quite some time. And I know it still exists.
So in 2016, 15, I exited a couple of businesses that I was the sole founder of both of those things, and exited those things operationally and not completely, but largely off the cap table, the shareholder structure. And so I was pondering my next move, and I thought the best thing to do would be to pull together a group of people, and the whole notion of the mastermind thing, the Napoleon Hill mastermind. So getting some bright people together in a room and ruminating on some ideas, utilizing some structured thinking. We looked at a range of, I think it was 17 different ideas. We evaluated them through different categories. What's the big idea? What's the possibility of it globally? Is it an investable proposition or not? And then the ones that ended up with a green light, we pulled into a business model canvas planning session. And we'd done about 4 or 5 of these. And then at the end of the business model canvas, what we'd do is we'd build out the model, and then we'd go, oh, there's a business here, or there's not a business here. And then we'd do this really simple thing called a thermometer. And the thermometer, because there was 5 or 6 of us in the room, depending on the session, would be, I love this idea. This is a wonderful idea, and I think that it's something that I could really see myself doing. Through to, this is pretty average, to, I don't want to do this. And the great business models in those early businesses were just businesses we weren't interested in. They were just a bit dull.
Yeah.
So we didn't pursue them. But then the Microsoft bot framework was released in I think it was late 2016. And so we cottoned across that. We then kind of reverse engineered something saying, well, hold on, this is a tool set which enables you to have customer service at scale. So automated customer service is the notion of what that could enable you to create. And so we reverse engineered a planning session and then decided that there's something serious, an opportunity here. So the next step was to conduct some customer research. So I spoke to about 43, 44 different organizations, so businesses of some scale that had customers that they served. So, ideally kind of B2C kind of customers. So they were serving more than 1,000 plus maybe 100,000 customers. Went through a detailed interview process to understand what the user viewpoint could be and whether this is something that you'd be potentially interested in. And then we kind of rounded out the proposition from there, built a prototype, took the prototype out to market along with some services because the notion was completely new at that stage. Again, we're kind of early 2017 by now. And those early people that we spoke to for the interviews were then people that we went back to with the prototype, said, hey, you've told us this thing over here and we built this thing here. Are you interested in maybe getting involved in this? And so a number of those became our early adopter customers. In fact, our innovator, if we talk about the tech adoption life cycle, starts with innovator 2 or 3% of the market, moves into early adopter 4 to 6% of the market. Then it goes early majority, late majority, laggards. I might miss one out, but those are most of those things. These are all the innovators. And so we were really successful at deploying about kind of 18, 20 customers in the first 18 months. And it was really a stratospheric success in the early days, and we just kind of absolutely rocketed, went through the roof.
Yeah.
Then we ran into a couple of problems. Before the challenges arose, it was clear to us that we needed to get ourselves offshore. We had a pretty good presence in New Zealand, but the idea was always to build an international business. And as the founder and the CEO, it was probably the best thing was for me to go overseas, and plus my two co-founders at that stage had relatively young kids. I was more flexible, and so headed across to Australia. That was the market we decided to go into. A little bit of business, a little bit of personal reasons. Mum wasn't well at that stage, so I wanted to be close to New Zealand rather than the UK. And the States is a big, complex beast to try and tackle, especially with the level of resources that we had at that point. And so a couple of things happened. The market moved from the innovator buyer and then got stuck before it moved into early adopter. There was a book written, I think it was Gordon Moore, that wrote a book called Crossing the Chasm, and it talks to this very problem. Innovators, through their nature, they have only a modicum of care around what the price of the thing that they are getting is going to be for the organization. They really want to do something that is different, that is brand new, that is leading the pack. They need to be seen to be innovative to their board and maybe to customers as well. And they are not concerned about return on investment. They're not concerned about how well this thing is going to impact upon the bottom line, because they refer back to earlier comment. They want to be the first one with the first iPhone that was kind of just okay when you compare it to today's one. They wanted to be the first one with a car telephone, which was hopeless because you couldn't really call anyone. Maybe landlines and you get the answer phone. So they bought those things regardless. And then we all hung up in this move between A to B. Globally, the same thing actually happened. So in New Zealand, we founded Ambit, and there was about 3 other companies that started just directly after we did. And those 3 companies folded over the next 12 months or so. They were unable to kind of deal with the inertia that had cropped into the market. And that trend, by the way, was very common globally. There was half a dozen businesses in Australia that all went to the wall. And the nomenclature that's given to that in the world of technology is achieving product market fit. Once you achieve product market fit, then what you've got is something which is a solution that aligns super well with a series of problems. The customers can understand it quite clearly, and they're prepared to pay for it. And so then you end up with this thing called product market fit, and that leads to a rush of demand. And so Ambit, along with a number of other businesses, got kind of hung up between those two things. Then in 2022, November, ChatGPT came out. At that stage, Ambit had burned through a reasonable amount of capital and had a number of successful projects that were out there operating. a reasonable amount of technical debt.
We should probably just define what Ambit was doing, right? Because that's kind of a key picture, just
Yeah.
because it is probably quite easy for people to understand. You use ChatGPT and you put a face around it, and then you got a talking thing, right? So yeah, tell me, like what was
Yeah.
Ambit really doing?
So Ambit enabled businesses to deploy a bot on their website or through Messenger or through voice, and that bot would deal with low level and repetitive customer queries. What are your
Mhm.
opening hours? What's my balance? I need to reset my password.
Yeah.
And so we enabled companies to build and deploy those things and then train the language model according to the language that their customers spoke to them through. And it could be built and managed very quickly and very easily on a generic kind of technology agnostic platform.
Hmm.
So platform play, AI at its core, but really around resolving the customer service problem. The challenge with customer service environments, and they haven't really actually moved on to a great degree, is that when you go and analyze the call flow and the resolutions that are generated from the contact center, about 70% of the queries are contained to 10 questions or less. They vary by industry, but it's typically the same 10 questions will go to Mercury Energy, that will go to PowerCo, that will go to any other one of the retailers. Why is the power so expensive? I'm moving house. It's the same 10 questions across the industry. And the problem that sits in behind that for the business is that they're answering the same question over and over and over and over again and paying. It costs around about $120 an hour to maintain a contact center seat. So the person's paid about 30, 35, but then you've got the on cost, the management cost, the software, the lease, et cetera, et cetera, et cetera. And so a bot can deliver that same experience for cents on the dollar. November 22, and ChatGPT hit the world with a great fanfare and with unbelievable speed of customer acquisition. They reached 1 million within 4 hours and 100 million within a month.
Yeah.
And
Amazing.
so nothing's been like that before or since.
Mm.
Ambit exists as a business today. It's a smaller business than it once was, but what it excels at is these customized bots on behalf of reasonably complex customer service environments where you need to have a locked down language model. ChatGPT is an open large language model, and so what a lot of people don't know is that when you start chatting to ChatGPT, your conversation essentially is available to be utilized as a part of the language training. And so, in other words, it's not confidential. It's not between you and the bot. Even when you go into private mode, it's still available for training over 30 days. And so,
Mm.
I always caution people be quite wary of what you share with ChatGPT. And by the way, I'm a huge fan. I use it weekly and almost daily, actually. Yeah, so ChatGPT and the things that were associated around the outside of it, what happened is that they were able to kind of storm into the marketplace and offer something which was almost profoundly superior experience at a modicum of the cost. And it was one of
Mm.
those things where it just kind of technology leapfrogged it. So Ambit's
Mm.
playing in a niche, and it'll continue to occupy and grow in that niche,
Mm.
but not to the level that perhaps it could have if
Sure.
that chasm hadn't stayed as wide and as long as it had. It was a 6 year chasm, which is a
Yeah.
pretty big distance to kind of hang on for.
Yeah. Which is a fascinating kind of story, I guess, around the speed at which we now need to move if we are genuinely trying to create something out of nothing in the area of startups. Like if you're trying to create a new business out of nothing, you kind of need to know that you've got some sort of runway, but especially when you're dealing with technology and it's just so easy for an incumbent just to throw billions at the problem to leapfrog you, then you kind of, I guess, need to understand what that is before you're going into it. Like, I guess where I'm going there is, do you think it's kind of harder for people in the tech startup space to genuinely scale their business now, knowing that there is this thing over their head that if they really are successful and they really are onto something, there's a lot more money that can just leapfrog them as well?
What I've observed over time is that New Zealand was, like we are in a lot of things, we were a little bit later to get into the space than bigger economies, particularly North America. And
Mm.
so it was pretty small not that long ago, and then it peaked out in 2022 at $260 million was invested into startups that year. which is a pretty large number for New Zealand.
Mm,
And that was double the year before, which was double the year before, which was double the year before. So
mm,
65, 130, 260. And so, that's pretty impressive growth. And a lot of that money in 2022 was going into new startups as opposed to doing follow on or bridge rounds. In other words, a brand new company, the portfolio, as opposed to doing another investment in the same company. And so money was everywhere. There was the quantitative easing, printing money that had happened in the background, and people were sitting at home bored with some capital, and so they decided to become angels. Was kind of largely what happened.
yeah,
23 happened. There's contraction, recession going on, and so that money has not completely dried up, but it's become massively restricted. And if you're like me, then a lot of folk in this space, it's not the only thing that they invest in. They have other investments because it is like going to the casino. It's a very, very high risk
yeah,
form of investment. And so when you have a mixed portfolio, probably part of that portfolio is property. And so, for me, the delta between rental income and principal and interest repayments was, this big. Now it's this big. And so
right.
the ability to invest in new things has become quite contracted, quite constricted over the last couple of years, and that's the same. The same is true of others. Play that out into VC, PE, and other investment funds. They've had to push out capital calls for that very reason because people are struggling to pay that money. So the dry powder
Mm,
that was talked about in the industry was dry powder sitting on the capital call structure, but not realized in cash. And so that's kind of contracted a reasonable chunk of the way down. So
mm,
investment money is much more difficult to get now than it was before. So that's a helpful kind of contextual environmental thing for people
yeah,
to understand. The other thing is that behaviour has changed. My hypothesis changed a couple of years ago, and historically I was proudly first check into a company. So I'd be the person that'd turn up at seed or pre-seed, and then either individually or with others put the first check in, and I very rarely did follow-ons. 2022, 23 happened, and businesses, were starting to struggle to meet their numbers. And so, if the hypothesis held true for me that the investment opportunity was still strong a year later, but they just had missed their numbers slightly, then it was far better for me to do a follow-on and support the growth of that business as opposed to finding potentially another completely new thing. So my
yeah,
ratio used to be about 80-20, 80% new, 20% follow-on. Now it's the other way
right.
completely. And I've noted a similar behaviour set in others as well. And
Yeah,
so put those two things together, it's become quite difficult to get completely new funding. There's
sure.
the odd exception. Tracksuit's been an oft-quoted example in New Zealand of recent times. 22 million Series A, more than 10 million bucks in recurring revenue, exploded out of nowhere, kind of 18 months, 24 months ago. It's a startup playbook almost in terms of what they've done there. But that's the exception at the moment, rather than the rule of money that's around.
Mm,
Another thing that I've been pondering, not in relation to investment, but just rather about startups, and this kind of talks to your question as well, is that I've just been wondering of recent times if we're getting to the stage of having enough software. If you look at the behavior of enterprise, if you're endeavoring to build an enterprise SaaS application, you need to know that the remit of the CIO, the CDO, is to simplify, not to overcomplicate. In other words, that means getting rid of software, not getting more software. And so a lot of CIOs, CDOs will tell you that part of their remit is to, if they bring a piece of software, they need to turn two bits off.
right.
And so the uh, common wisdom, which I still think is correct, is that we should build for a niche and then own that niche and then expand out beyond that niche into geographic markets or add things around the outside. Add capability and stretch what the original intent of the application was. A la MailChimp offering a CRM now, just for example. I think that there's so much noise around software these days that I'm just kind of, that's the other thing that's informed my be wary about investing in completely new things. So I just kind of have this feeling that there's going to be less bigger winners. I'll unpack that. Historically,
Mm,
across angel investment, if you've got a portfolio of 10 companies, three will completely fail, all your money gone. Three, you'll end up with getting a little bit or all of what you put in back. Three will go about 2x. So that 9 out of 10 will equal itself out. So you're back at zero again. One of those things will go to 20 to 50 times. And that's how the portfolio ends up becoming a successful portfolio. There's obviously a lot of things that sit in behind the scenes around ensuring that that is what you experience as an investor, as opposed to just a trend or an average out in the industry. But my hypothesis now is that there's going to be more failures. So there's going to be 19 that may not work out, but one will go 100x.
I see.
I think
Mm,
that's yeah. I think that there's the world of choice. You know, we've got the paradox of choice exists for consumers and it exists for businesses these days. And
mm,
when you look at the organisational, the world, the universe is ever moving towards complexity, ever expanding universes. Then that means it's more and more and more complex, right? But
mm,
I think that the behaviour that I observed of individuals and of enterprises and small businesses are basically individuals with a suit of armour around them. They are moving away from complexity towards simplicity because it's just gotten too complex. The world is largely too complex, and there's too many distractions, and it's a constant barrage of information. For me, for example, I stopped
yeah,
reading the news a very long time ago, 25 years ago, because it was all bad.
yeah,
And if I invest in crypto, as do most people with a balanced portfolio, dollar cost averaging, by the way, ETH and
yeah.
Bitcoin, just buying the same amount of those things for ETH for about 3 years, Bitcoin for about 7 years, and every then I sell one or two because it peaks at a certain price.
But going back to what you were saying there, though, like you have this general sense that there's enough software. So if you were coming up with a great new idea and it involved creating new software, then you're really just adding to that complexity. You're adding to that noise. So I guess how would you play that? So if you were an innovator in that space and you were creating something out of nothing as a startup, then how would you manage to keep on going with that, knowing that you kind of have that runway which is getting shorter and shorter and shorter just because
Mm.
of complexity increasing?
So I think it comes down to really, really intimately understanding the pain and the problem set that you're solving, and being really clear that it is something which is of sufficient gravitas for a company to pay you their very protected pot of money, and also engaging services and getting into a project. And so I think that refer back to my early Ambit story, and the mistake that I made was to not get clarity on what the longevity or the transfer from those innovators into the greater market could have looked like. And I
Mm-hmm.
even think now, with the benefit of hindsight, I don't know if I would have been able to project that because too much of it would have been based upon potential future behaviour. But
Yeah.
I think really, really clearly understanding the place of what the solution is going to alleviate. What is the balm? Is the balm really the solution to the problem that that organisation is facing, and probably have a strong brand. I mentioned Tracksuit a second ago. That's a great brand. The previously unavailable team. That's one of their gifts is building a wonderful brand and brand story. And what a cool name! Everyone can relate to the idea of tracksuit and how what do they do their track brands.
Yeah.
So it's a pretty cool brand. So I think I see the rise of brands as having cachet and value again, such as they have done historically. Intellectual
Mm.
property, historically, 60s, 70s, 80s, would register on the balance sheet a reasonable value attributed to the brand of that business. That kind of
Mm-hmm.
went away in the last few years, and intellectual property became software or processes or systems that you ran inside the organisation. But I see the rise of brand again, and that's in part supported by the mega, the FAMGA, Facebook, Apple, Microsoft, Google, etc. Of the
Yeah.
world, and the power of those brands.
Okay. Correct me if I'm wrong, but you've never really been an employee per se, have you?
Oh, in my 20s, I had jobs. So upon leaving university, and I graduated, trained, and part qualified as an accountant, of all things. So spent some time working in that field to validate the. When I finished at a university, I distinctly remember this question in my final year of financial accounting. Accounting is an art, not a science. Discuss. 35% of my entire year's grade, and I was like, I almost wanted to screw the paper up and throw it away, but that was the end of my degree, and it would have been a bit pointless having a ideological fit at that stage. So I decided that it cemented for me that I probably wasn't going to be suited to be an accountant, but I thought I'd better practice in it for a period. So I was
Yeah,
paid at that point in time, and I then stumbled into executive search, and I was given an option early on to work on a performance basis or to work on a salary with a small performance basis, performance and essentially being commission only, success only, and I opted to head down that path. And so, short of a couple of years of being on a salary, I've always been driven and rewarded through the success of my own actions and
sure.
endeavors.
Yeah, which is kind of like the same thing as being self-employed entrepreneur, same sort of thing, right? Like you get
Yeah,
paid when you see results, right?
yeah,
So I guess what I'm driving at is that often when I'm dealing with clients who are making investment decisions, if they receive a salary or they receive predictable streams of income coming in, it's fairly simple in terms of figuring out where they're going to be at some point in the future, therefore how they should allocate that pot of money, that stream of money that's coming in, what types of investments should they be investing in over the long term to get the results that they're after with an acceptable amount of risk. But when you're self-employed, and especially when the type of business that you're doing is relatively high risk, I guess if you're in the startup space,
yeah,
then it takes on a completely different dynamic, unbelievably different dynamic. And over the past few years, I've been getting a lot better at kind of just understanding what this is like because I kind of sit in between both of those places with my business. So it I'm just wondering, like in your world, when you transitioned or when you were bought out or when there's significant liquidity events, is that when you had investments? Like, is that when you diversified? Is that when you made your investments? Or did you kind of put it into a pot of money to create a synthetic income, which you then allocated gradually over time, like dollar cost averaging?
mm,
How did your investment journey kind of work?
yeah. I've done both actually. So my first angel investment was when I was in a period of employment in my late 20s. I was 28 and I spent about a year working in a business as a global account director. And so I had some money and some friends were starting a business. We then had an exit. It was a great exit. And so by then I'd started my first company. And so I put that money aside into a fund and then went about the journey of starting to invest in more and more and more early stage venture startups. And so I have adopted the dollar cost averaging across asset classes that are volatile, so securities and crypto,
Mm,
because then essentially, I very much subscribe to that notion of time in market versus timing the market
mm,
um, with those volatile asset classes. With stable asset classes, then I think you've got a much better ability to time the market. And so for me, I mentioned the commercial industrial property thing. I started to buy that in the GFC, and
mm,
that was all about timing the market. And I could see year on year from 2009 till 2017, I was buying progressively larger and larger titles. And so it was really clear to me that in 2009, by 2010, the 2009 deal wasn't around anymore, and by 2011, the 2010 deal wasn't around anymore. But it was
mm,
gradually increasing, and they were going up by a reasonable amount. The right type of industrial property was the absolute darling of the property market in 2020 to 2023. Medium industrial, high stud, B train access, that kind of thing became a very popular asset class and had outscale returns across any of the other property assets.
mm,
So that was very much timing, but I preferred the notion of time in the market, accepting the startup investing, pushing that aside, because that is very much all about timing. I used to think that the most important thing around a business's success was the team first, the idea second, and the execution the third. And then there's a bunch of other things that sit in behind that. And now I know, I really believe that it's the timing first, and then the team, and then the
mm.
idea, and then the execution. Because the greatest idea in the world, if you bring it out into a world that's not ready for it, and this is kind of my ambit experience to a certain extent,
Sure.
we struggled across that chasm because the world was just not ready to do it, and it became ready in 2022. And so now I think timing is everything around startup investing, certainly. But to be
Fantastic.
clear,
Yeah.
I would never suggest to people to try and time equities.
No.
Timing the bottom or the peak of a market is just,
Yeah. Okay.
So
So you kind of look at the high risk, and this is absolutely true with startups, and that's why I think like if you're investing in startups, you really have to do a bunch, right? Because you know it's probably only going to be one out of 10, or like what you were saying before, maybe one out of 20 that really hopefully pops. But with commercial property, do you use leverage? Because I'm guessing just by the overall story, you probably don't necessarily need leverage if you just shrunk the size of what you did. But do you use leverage to expand your footprint in the commercial property space?
definitely, yeah. So commercial property, for those that don't know, the your LVR is a lot lower than it is in residential property.
Mm.
So the banks over the last couple of years have really pushed me towards kind of 50%. And so it's actually slightly less than that now.
Yeah.
So it's about 40, 45, 46%, depending on whose valuation you believe, the banks are
Yeah.
mine. Whereas in residential, you can comfortably borrow on 80% debt.
Yeah.
Depending on the time. But I definitely use leverage for commercial and industrial property. But
Yeah.
to be clear, I've bought one, participated in one buy in the last 5 years because there hasn't been anything representing a good opportunity.
Yeah.
It's
Okay.
with the money available around COVID, it was pumped into the market. Then that
Okay.
was one of the asset classes that just went through the roof.
Yeah. What kind of percentage of your overall portfolio would sit in the commercial property space?
Yeah, so it depends on a number of different factors. But kind of imagine between 60 and 70%. Kind of imagine
Oh,
that
wow.
sort of, yeah.
Irresponsibly long in that space. That's good.
Yeah, yeah,
Okay.
it's stable, and the reason that I say it depends is because I carry the um, early stage angel venture investing stuff at investment value, not at book value, and so
Okay.
a liquidity event can occur, and it can move the shift
I see.
back towards that space a little more.
Yes. Yes.
And so, one event can be a fairly dramatic move, but I don't want to account for those anywhere as being at what the founder believes that they are worth, but rather
Yes.
the money that I've invested in it at that point in time, that valuation that we agreed upon then.
Yeah. I hear
Yeah.
you. Okay. All right, Josh, you mentioned that you also are into crypto as well. You mentioned Bitcoin and ETH. As a percentage of your overall portfolio, how much are you roughly allocating towards that?
Oh, less than five.
Less than five. Okay.
Less than
Cool.
five. Yeah.
Yeah. And so if we take the difference of what you're doing, do you kind of invest in sort of any plain vanilla diversified managed funds, or is diversification really just for those high risk bits that you embark in?
Yep. So ETFs, again, it's about the same as crypto. It's about a similar value to crypto,
Yeah.
and I really treat that as being a stable cash alternative. And
Yeah.
so it enables me to, kind of dip in, dip out where I need to.
Yeah.
So
Yeah.
yeah, ETFs for me. And I do
Okay.
still look. I remember Warren Buffett once said that they should have an 0900 number for him to call when he wants to buy an airline stock, and they should talk about it. I feel like that with a lot of equities. I've History has proven to me that I've been reasonably good at buying into startups and commercial property and crypto as well. But I really don't buy equities all that well. I've got to be honest with you, Darcy. I tend to time them quite badly and then get excited by them and buy too much, and then something
Yeah.
happens and I forget about my notion of going, if it dips 10%, sell. Put a stop. Not a stop
Yeah.
order, a sell order
So whatever.
on
Yeah.
it. And I forget about that stuff because I've fallen in love with the stock, and so
Yeah.
man, I really try and avoid buying individual equities these days and just stick to
Yeah.
ETFs. I'm not a trader. I traded derivatives back in the late '90s, early noughties. So
Yeah.
Chicago Mercantile Exchange,
Yeah.
dial-up internet connection out of NZ. And I was in between ventures, and so I had some time on my hands, and so I'd be get up at 3, 4 in the
Yeah.
morning and
That's
kind
right.
of getting on and doing the trading thing. And
Yeah.
I did it for about a year, on and off in between things, and I did pretty well. But man, it was really not good for my stress levels. So
Yeah.
I identified pretty early on that I am not a trader, and kudos to those people that love that edge of your seat, that anxiety, that kind of
Yeah.
thrill. But it's just not me. So
No.
I always say to people, I get a lot of people ask me about investing in startups, for example. My first question to them is, why are you interested in looking at the space? And if the first answer to that question is, well, I've got retirement money, I want to double the pool, or I really want to make a decent return, or I want to see a 10x, I'm like,
Mm,
yeah, I'm not sure if this is the right class for you. Expand out on a little more, but
mm,
it's hugely risky.
mm,
And so, a personal bugbear of mine is that a couple of charities, very large charities with very large endowment funds, have started to delve into startup investing. And I'm like, wow, I hope your benefactors realize that you are basically going to the casino with their money, because that's kind of what you're up to here.
yeah,
So I the lesson, the story that sits in behind that, Darcy, is just be aware of what type of investor you are and what type of
correct.
risk you can stomach. And it does
Yeah,
change over time, right? Tony Robbins talks about, it's probably not him that thought of this notion, but asset allocation. Having buckets of things and working out, which stage and age of life you're going to have stuff in high risk versus in very secure, and bonds, and fixed interest, and that sort of stuff, and just be clear about what that looks like. If people don't know what asset allocation is, then I'd suggest doing a masterclass on that, because that would help you understand how to kind of move stuff around, or talk to Darcy, because he'll know.
appreciate the plug. Thank you. So as we come in for a landing, I just want to kind of loop back to the thing that we started with, which was that difference between being rich and being wealthy. And I would then draw upon that wealthy. We got freedom, having an impact, you're sharing resource, and ultimately you're probably acting out of purpose as well, which is really important as an investor. It's not enough to have goals, you need to have a purpose above that, right? So like when it comes to generosity, which is something that I personally believe in terms of, hey, it is the right thing to do, but it's also a natural response when you realize that something has been given to you that is fortuitous, or you're just naturally thankful for that. It's kind of just a natural response. I'd go even further and suggest that there's possibly just we'll call it some magic, where as you give, funnily enough, you do seem to receive. And I want to know, like, what, if any, of that I just said was kind of present when you embarked on one of your latest initiatives, which I'll get you to explain what it is as well.
Yeah, great. So Payve, Payve, is a payroll giving platform, pave.org. So I have given money to charities for a very decent length of time, since I've been able to, really, since my teens. And when I exited my the Ambit business operationally, I had some capacity, so I leaned into some of those charities and offered some pro bono support and advice. Came across a ubiquitous problem, which is an access to ever increasing funding. What a surprise! It's essentially just the same as growth for any organisation, accessing funding. And so I then stumbled across this thing called payroll giving. So essentially, the Inland Revenue Department anointed or allowed organisations to deduct at source payments that would go to charities, and then deal with the tax rebate at that point in time.
Mm,
So what we do is we work with employers who have a civic mind and would like to offer their employees the chance to participate in a program that they would then like to match. And the mathematics works like this. An employee will think about giving, and this is a good average number for us, $50 a month. And we then offer them the ability to pick between tier two and tier three charities. So those are the
mm,
ones that are receiving, tier two is less than 30 million a year, tier three is less than 3 million a year. So they're grassrootsy, kind of smaller charities. So they've gotten past that, single person working in there and trying to do all things to all people. Probably got a team, but they tend to be really efficient. So those are the charities that they choose between. The individual says, I want to give $50 a month. They think about that as being on a post-tax basis. So pre-tax, that's $80 a month. So that's how the calculation happens. And then the employer matches that to the tune of $80 a month. So in other words, the person feels like they're giving $50 a month, but in reality, the charity receives $160 a month. So it's a
wow.
really clever little force multiplier. We're a registered charity. We have 100% pass through of all of the donations that we receive. We're an aggregator, so we don't personally develop or support the causes ourselves. We identify charities that meet our standards, and then we offer people the opportunity to give to those charities. We then have a small platform fee that the employer pays, which enables us to pay for hosting and design and banking and accounting and all that sort of stuff.
That's so cool because a lot of people don't realize that when you donate to a registered charity, you're going to get a tax credit because you can basically give with your gross income. So it's like you get that back. So that's pretty cool. So if you were giving $50 a month, you're actually creating $160 per month worth of outreach, basically, which is pretty
Exactly.
cool. Because like I
Yeah.
think if all of us were doing our jobs properly as citizens of this earth and we were mining wealth out of this dry crust and we were giving out of a free spirit, we probably wouldn't need so much government. We probably wouldn't have so much waste. And we would probably see that the equality problem just doesn't exist anymore. But the reality is that we're just too damn greedy, right? Let's be honest.
I Greed is endemic. Greed is a disease. I think it's the absolute worst of the human condition. New Zealand used to be one of the top three most generous nations in the world, and we have dropped down to number 9 now. And so the trend is downwards. And so we're probably going to be number 11 in next year's World Giving Index, I believe. And so what we're endeavouring to do at PAVE is to enable Kiwis to become the most generous nation in the world. But we have that in at our core because we are all immigrants to this country. We're a very
Right.
young country, globally speaking. The indigenous people are immigrants to this country. It was the flora and fauna that was here first.
Mm.
And for some others of us, we've been here for a couple of hundred years, and for some others, have been here for a couple of years.
Mm.
And so to enable us to succeed against some relatively difficult conditions and environments, we had to muck in and support each other. And I think that kind of over the last couple of years, there's been a bit of greed, there's been a bit of hardship, and people are kind of forgetting that that's a bit of the nature of humanity is to give. And for me, I started to double down based upon. I think that everyone does give based upon some form of selfishness, and the selfishness is because they give because they know that it'll make them feel better. Hey, but if both people are winning, there's nothing wrong with that equation, right? If you're
Yeah,
giving because
whatever. Yeah.
someone receives, they feel good because they're able to eat or educate or heal, whatever it might be, then that's a wonderful, wonderful thing for them. But
Hmm.
I do wonder if we could do a little more because I do know
Hmm.
that it's one of those laws of success. Back to Napoleon Hill, in fact, he calls it one of the 7 laws of success: give first, and you shall receive later. Essentially,
And so that's payve.org. And if anyone's an employee and they want to kind of talk to their boss, is that kind of how it would work? Is that it starts at the employer level, or can
but
employees initiate this?
yeah, either one. So
Okay.
reach out to us, and one of the team can come back to you and have a discussion about how it works. And we tend to go in through employers, but the employer will bring it to the employer, and then we go in that way. So
Okay. No,
yeah.
that's really cool.
Mm.
Love your work. Please keep going with that. It's awesome. Awesome, really, to see this.
Thanks, Darcy.
You're one of the people that I'm keeping an eye on. So I'm expecting good things from here on. And Josh, don't
No
stop.
pressure.
Yeah, no pressure.
Thanks, Darcy.
Great chat. Great chat. And we'll catch up with you again soon.
Love it. Thank you.
Thank you.